Good morning, traders. It's 8:01 a.m. Chicago time on the 18th of May, 2016. It's a Wednesday. Thanks for joining. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Looking at the overall sentiment overnight, things are looking very, very risk averse. The only future that I monitor that is positive is the US dollar, up 0.24%, 23 cents. Everything else is down. I want to highlight though that crude oil hit $49.23 in a June NYMEX contract, higher in Brent. Again, $49.23 yesterday. It got to about $48.50. It's currently trading $48.90. Crude oil's on a tear higher. It's on a 7-month high currently. The expectations for a Fed rate hike are being pulled forward. The consumer price gains in the last 3 years, and hawkish Fed speak from Atlanta Fed Lockhart and San Francisco Fed's Williams have caused Fed fund futures traders to pull forward their expectations for an interest rate hike by the Federal Reserve. I want to remind you that today we get the FOMC minutes from the April 26th, 27th meeting. Those minutes get released at 2 o'clock Eastern, 1 o'clock Central. Other than that, on the calendar, we're looking for U.S. oil inventories at 9:30 Central, 10:30 Eastern. The expectation for crude oil inventories is negative 3.5 million barrels, distillates negative 1 million, gasoline negative 1.25 million. There was a draw of 3.4 million before. Okay, so that's what we're looking for today. Other than that, we have Cisco aftermarket. Let's take a quick look at what the markets have done yesterday. In fact, again, I need to bring up this video. There we go. So the expectation yesterday, as far as what Hypo 1 was, this was it right here. This was the expectation yesterday for Hypo 1. Was looking for a push higher into the prior day's point of control for a test of balance, and then the expectation was for it to drop and start moving towards that 40-50 level again. Remember, we're in balance. We keep trading back and forth. Let me take down this news feed. So here's the point of control right here, this pink line, this thick pink line. We have a naked point of control down at 42.50. Boy, this seems really fuzzy, doesn't it? It's at 1080p. Oh, there we go. 42.50 and with a pause at 51, so I was looking for a bounce up. And again, we're trading the same levels over and over. So these are the lines really that matter, as you can see here on the flex levels, these pink lines. And it is, as I've said over the last couple of sessions, it is getting crowded in here because of the length of time we're spending in the same area, back and forth, back and forth. So that's how things are shaping up. We're shaping up pre-open yesterday. Let's take a look at what the market did. Here's what actually happened. We had an open right in the 59.50, and we went directly to the 62.75, 62.50 area for a test of that point of control. It would have been nice to have an open auction test, and failure gives us a chance to hop on. This move up happened so quickly. You'd really have to stand in its way, and I'm not in the habit of doing that. You'd have to stand in its way to get that fill in the 62.50 area. So I missed this move down, but I was still targeting the 51 area on that. The market ended up rotating back up to 60.50, and then chopping around for long enough to create the structure I look for to get on the short, and then finally it rotates down to 51 and a quarter right there for our initial target, pulls back up almost to the mid, and then drops like a rock to 40.50, and then ends up balancing at 40.50. And notice the HVN built right at this MC point of control. Same spot, same structure. Yesterday was a perfect textbook. You can grab this and stick it right into a market profile or volume profiling book. Perfect textbook indication of a double distribution profile. Essentially, the market balanced up top, built a lot of structure and energy for the break lower, and then when it broke lower, it found balance again in this 40-50 area. Again, the 40-50 area is key for those who haven't been around for a while. The 40-50 area comes to us from a long lineage of volume. The 40-50 is right here. You can see that it's a very high volume area, and it's also the more recent balance, the point of control more recent balance. We are still stuck in this super high volume portion of the profile, and that's really what's, the market is not able to move away from these areas. And so what we're doing is we're essentially sitting here building more and more volume. Remember, in futures, for every contract that is bought, there is a seller. There's never more buyers than sellers. There are more aggressive buyers than there are sellers, but there are never more buyers than sellers in futures. So eventually what happens is we build a lot of volume, and generally when we build a lot of volume, the move away from this is fairly powerful, because if it moves lower, then you have all of those who bought having to push out and liquidate and become sellers, helping the move happen, and then the opposite if we start to move up. Given the trend over the last couple months or several months, we're essentially building a head and shoulder here on the daily. If you look at this structure, you'll see that there's a head and shoulder being built here. 26 is the key figure, as I'd mentioned before. 26 is a big low on the monthly. 26 changes the one-time framing on the monthly, and we need to keep an eye on that. The market is weak this morning. Again, it's red across the board. Gold leading the move down 0.6%, and so overall the market sentiment is to safety, putting this 2026 on target. For now, we're trading 2035.50. 2026 is only 8 points away. Just to express to you the importance of that monthly one-time framing level, here's where it comes from. Switch colors here real quick, just so that you can do the whole point again of these trader bites is not to feed you information, but to help you see how the market can be structured and analyzed for your own benefit, for your own trading, so you can do this on your own. But essentially what we've had is this one-time framing starting back in January. Here's the low, here's the pivot low, here's a higher low, there's the higher low in March, and then as we move up, there's the higher low in March, higher low in February, and that higher low in February is at 2026. That's the level. If we break 2026, it breaks the monthly one-time framing up. In other words, the monthly trend up. There are a ton of market profilers, long-term funds, and so on that are watching these kinds of levels, in my opinion. If we break that, then we start a cascade. We're likely to have a cascading drop down into the 2015.75, which is the next big area on the long-term profile. Again, 2015.75 is what separates the upper distribution from the lower. So when I zoom in here, 2015.75 is what separates this upper portion from the lower portion. And that's how things are shaping up right now longer term. So with that being said, let's look at what we've got on the overnight session so we can set up we had to look at the Globex so we can set up what our expectation is for the day session. So Globex has not done very much in the it has continued this trend down. We did build an HVN. We did not transfer the point of control down from 2056.75 to 2043.75, which is where this high volume node is, but overnight we built our point of control right on top of the 2043.75. The overnight session essentially confirming and accepting the afternoon point of control or the afternoon value that was put in, and we're moving away and are starting to sell off now. So the expectation is that any push up is likely to see some resistance. Of course, the last 3 or 4 times that we have been down in this area, remember 2035 is that high liquidity level. The last few times that we've been down at these levels, the market has been bought up pretty strong. So it's fair to say that since we're opening on the edge of yesterday's range, even though I expect responsive buying back into yesterday's range up to that 2043.50, likely to chop around. If anything, it might push to 48 and then swing back down. That's my primary hypothesis. That would be the normal course of action for the auction coming into today. We would expect responsive into the next high volume area. We'd expect it to go to the LVN of that high volume area, and then test and then rotate down. However, don't be surprised if we open up, test lower immediately, and then find our way back in the range and then watch this thing go back to 56.50 for the second hypothesis. We've seen this happen over the last few days where we sell off and then we take it all back. Why? We're imbalanced, and also prices in this area have been viewed as cheap by certain participants. So we've been in this ball game here for the last 2-3 weeks, and I don't see how it would change today. I can't tell if the primary hypo has a lot of edge over the secondary hypo. I am sitting out the morning open, and I'm waiting to see what kind of a test do we get on the open. Does it test up and find resistance, find sellers and rotate out of range, or does it test down and find buyers and rotate into range? That basically tells me and sets me up for which targets I'm going for. Again, these trader bites are not intended to say, yes, this is the exact price the market will turn. This is exactly the kind of open. The hypos simply say, here is the plan. Here is the plan, and if this plan, this particular hypothesis works, here are your targets. Here are your highest probability plays. So the intent here is not to determine where the turns are. The turns are just guesses based on range rotational behavior of the ES and how it responds to the prior auction, just based on experience and just tons of study. And then the rest of it, as far as how the plan works out, really, I'm just looking for, once the market starts to take a direction, the hypo tells me what I'm likely to expect as far as targets and how I could manage the trade. It helps me decide where my stops need to trail and things like that. Okay, there's a third hypothesis here, and that is an immediate attempt higher and a drive down. That hypothesis becomes greater if we are, hang on, let me clear my that hypothesis becomes greater if we open actually out of range. If we open out of range and get an OTD, a test and an immediate push, this could be a big drop day. Remember, FOMC minutes have been a mover in the past few months. The market really needs to know what's going on with these interest rates, and that comes out at 1 Central, 2 Eastern. So I'm not sure how much is going to be committed before that report comes out. But we are at a week low area. Essentially, we've been tapping on this for quite some time. This 2035 to 2026 range, the expectation overall is it's likely to drop through. That's hypo 3. Hypo 3, if it materializes, will likely give us a pretty wide-ranging day and some decent volatility. So look out for that. Anyway, that's how things are shaping up. I want to remind you that we did an AMA yesterday. It lasted till about 5 o'clock Central, 6 o'clock Eastern. The recording is up on YouTube. Look for, it's actually in the description. You can find it in the description on this YouTube video. If you click on the video and go to the YouTube channel and look at the description, you can also find it on Twitter. And if you registered, you will be sent a copy of it. Thanks for tuning in, and I'll catch you tomorrow morning. Take care.